Welcome back. This is Closing Bell. Sudarshan Sukhani is back with us. Also joining us on the show, Dilip Bhat. Dilip, you expect we'll see another couple of days of consolidation of this nature?
Menka, my broader call is that in a run-up to the budget, market perhaps the correction will remain short-lived and perhaps it will still continue to see opportunities to move ahead broadly, and maybe it's after the budget probably some kind of sanity and some kind of probably rationalization would happen. But till that time, I think markets possibly aided by a good amount of FII flow will continue to be in the positive side very broadly and very largely.
Okay, in that case, Dilip, hi, good afternoon. What would you buy at current levels?
Good afternoon, Anuj. I think it has to be stock specific, no doubt, from the current levels. I think some of the stocks that we would still go for, I think it's something like NTPC looks pretty good and interesting. Tata Power looks pretty good and interesting from the current levels. Divi's looks a stock which one should own even from the current levels. It has moved up, but still that looks pretty strong from the current levels. I think looking at the way in which Larsen Toubro has really moved up quite a bit, I think if some fundraising is also done by something like Reliance Infra, even that can really add a good amount of luster to the stock. So I think Reliance Infra looks pretty interesting from the current levels. So I would even slightly on a safer bet, and HDFC Bank also would be something which would look interesting from the current levels.
Sudarshan, your call on Hindalco has seen some profit booking today, 2.5% down. Good time to enter, or would you wait?
No, I would think it's a good time to enter. This is the kind of corrections we are going to get in a running market like this. I also want to share a research that we did yesterday. Rather, we identified and then shared it, and then I'm just talking with you about it. Since 2012, the S&P 500 has been on a tear. It has been rallying, and in 2 years it has moved up a lot. Now, in that 2-year period, from May 2012, or rather June 2012 to July 2014, it's never gone through a 10% correction. So my point is that it is many people, including me, and I think all of us are saying the markets will correct, but it's not necessary. It's not a given. The markets may correct in a very shallow mode for 2 years altogether. We have a very strong example. This is something only the future will tell us, but shallow corrections should be bought into. That's what my point was.
Okay, what about auto stocks? We've seen today leadership being taken on by Tata Motors. Sudarshan, how does that look to you on the charts?
Oh yes, that's only because Maruti had such a sensational run-up. It couldn't have gone up every day. And Tata Motors is doing what Maruti was doing earlier. One more day of quiet movements and Maruti will come up again for buying. Not necessarily today. We want to give it one more day.
What about Hero Motor and Bajaj Auto? They've been two big losers in trade today, down between 2 to 4%.
Yeah, mostly all the three stocks you talk about, Maruti, Bajaj Auto and Hero Motor, have done well in the last 3 days. There has to be a pause. My point was that after this pause, and that pause is not necessarily coming to an end today. Perhaps tomorrow or Monday, all three of these will become buying opportunities. The broader theme is that the auto sector has not completed its run-up, neither has the Nifty.
All right, we're about less than a minute away from the end of trade today. We're going to close with marginal losses on both the Nifty and the Sensex, but keeping it above 7,700 on the Nifty and at above 25,800 on the Sensex, it seems. The mid-cap space, it looks, might end the day, in fact, with some very marginal gains.
Indeed, Menika. So let's talk about some of the stocks, in fact. Hero MotoCorp, now that's gone ex-dividend, but even adjusted for dividend, that was down a bit in trade. Hindalco and ONGC were two big losers, both these stocks down 2.5%. Then you had stocks like Hindustan Unilever, Reliance, NTPC. All these stocks were down about 1%. The fact that in spite of all of this, the market managed to close with only about 0.2% losses is because a couple of stocks, Tata Motors, which was up 3%, and ITC, which was up 0.5%, would have lent quite a bit of support to this market. So that's why you saw the Nifty only down about 15 points. A couple of other stocks that deserve mention: Sun Pharma, which was up 1.5%, and Cipla, which was up 0.75%. So Pharma did reasonably well in trade today.
Pharma, I think, was the best performing sector in trade today, whether inside the Nifty or outside the Nifty. That sectoral index has also done very well. Auto was the other one that did rather well. both inside and outside the Nifty. And IT saw some gains because I think we've seen Wipro, Tech Mahindra, and now finally TCS has also moved into the green. All of those stocks managing to add on. United Spirits continues to stay higher. On the mid-cap front, an interesting bunch of stocks that have topped the day today. So from United Bank, which was up 17% in trade today, Suven 11%, Sharon Bio 9%, Markson 7%, Cox and Kings 7%, Century Ply 6%, Chambal Fertilizers 6%, Raymond's 5.5%, Astra Micro 4%. So a variety of different sectors and businesses represented in that top gainers list. On the losing side, HCC continuing to go through some tough times this week, down about 5%, HFCL down 5%, JP Infratech down 5%, MTNL down 5%, Indiabulls Real Estate down 3.5%, Ballarpur, Jaicorp, Syntex, Bajaj Hind, India Cements, and First Source was a loser in trade as well today, down 2.5%, as was Tata Tele. These are some of the stocks that didn't do very well.
Indeed, Menika, you can add GMR Infra as well, 8% down.
We've been talking about that through the show.
So quite clearly, this was basically a profit booking move that you saw in some of these mid caps, especially the high beta ones. Sudarshan, any cause of worry for some of these stocks, the JPs, the Unitex, or the GMRs? Because the rally has been vertical, but today we have seen a bit of correction.
No, I would say there's a lot of cause for worry. For example, JP is giving us clear signs that after that rally, or even Punj Lloyd is suggesting that a sideways move is now imminent. So, you know, mid caps have only seasons. They don't actually relentlessly go up. The Nifty could do that, but mid caps are unlikely to do it. The focus as we approach the budget should shift to the blue chips.
Dilip, in your previous response, you said you expected some sanity to return to this market after the budget, giving us an indication that you obviously do expect some mellowing of the markets, if I may call it that, if not sharp corrections. In that context, what sectors or stocks do you think have peaked out? And therefore, this is a good time to be able to book your profits and get out, because from here onwards, you might see weakness in those areas.
Sure. So, Menka, what I'm also trying to say is there's going to be some sanity, which possibly can come after the budget. But, you know, this market remains, in a way, a trending market. In a broad channel, the trend is upwards. So this will always remain a buy on the dips market at the moment, at least for next some time to come. But yes, in the short run, maybe something like the capital goods, which has really gone up quite a bit, may find itself in a correction mode, or maybe some of those oil marketing companies, which has really run up quite a bit, they might come into some kind of correction mode. So some of those things possibly can happen, but as what I said, market is just looking for an opportunity when to buy. So every dip will be used as an opportunity for people to really acquire. But some of these sectors, yes, the run-up has been good, and especially in the mid-caps, there has been especially a runaway rise in most of the stocks. So possibly some of those can see some breather or some kind of correction, possibly if there is no tailwind in terms of follow-up buying that can come.
How would you approach financials from here on, Dilip, between now and the budget and maybe even thereafter? We've seen some participation, but really nothing overwhelming come in from either the private sector banks or the public sector banks, even on days like yesterday where we saw record highs.
So my broader call on this financial says that as we saw RCOM raising a good amount of money, we heard that JP has raised some money,
GMR Infra.
Construction.
Yeah.
GMR Infra raised money, Hindustan Construction is raising money. So I see a direct link that as more and more of these stressed out companies are raising more money, it will become more and more easier for people to take a call on the PSUs and the private sector banks, because obviously there was a potential threat of these stressed out assets getting reflected more into the NPAs. As those fears gradually recede, as market gets into a capital raising mode, I think the financials would look increasingly good. So I would really focus more on the financials, even post-budget, wherever there's an opportunity for it to correct, especially the PSU, the second-rank PSUs, even the private sector banks, and even the frontline banks. So all in all, I think the financials would continue to look pretty good and interesting opportunity to acquire.
So Darshan, are you tracking the chart of Glenmark, and what would be your call on that stock?
No, I'm sorry, I'm not. I don't track Glenmark, so It would be unfair to make a comment. Very sorry.
Okay, that stock, by the way, had a big move in late trade, up 6%. Dilip, Glenmark, or for that matter, rest of Midcap Pharma, which had a good day today?
So I think in the mid-cap pharmas, I would really concentrate more on something like Aurobindo Pharma, though it has had a run-up, and I would look for an opportunity to buy the lower levels. Because what has really happened in Aurobindo Pharma is that they are now in a league of EBITDA of almost about 2,000 crore plus, and by the end of the year, the total debt would look like something like 2,500 crores, which is a very fair equation. EBITDA of 2,000 crores and 2,500 to 2,700 crores of the borrowings. So that looks pretty good and interesting. And I think slightly down the line, I would also look at something like an IPCA. Even IPCA looks pretty interesting even from the current levels, though it has had quite a good amount of run-up. So I think these two stocks look pretty interesting in the pharma space.
All right, gentlemen, we're going to thank you both for joining us today on Closing Bell. Thank you for your views. We're going to slip into a quick short break on the other side.
I've not taken monetary policy totally off the table as a measure to be used when financial excesses are